Fellow traders, 'tis I, TheRumpledOne, coming to you on Wednesday, September the 10th. The year's 2025. Let's talk trading. Small wins. These videos are for educational purposes only. Your results may differ from mine. And as always, let's have risk management in place. So most of your losses will be small losses, or at least they won't exceed how much you're willing to lose on any one single trade or during any one single trading session. So yesterday, Walmart and I, we talked about big losses and the ways you can have big losses. Now, small wins, on the other hand, that's really on you, the trader, once again. You can sit there and you can do all the charting you want to do, put all the indicators on the chart you want to put on there. But the point is, price just doesn't really move in a straight line that often. Even though I did get lucky this morning, right before the news, I went long because let's see if it doesn't. I'll have to. Uh, let's see. Maybe I can change the time frame here. You can't see it on this chart. Well, actually, in a way you can. Um, I was looking on the 1 minute chart, even though the same thing showing on the 5. If the candle before the news event is bearish, then usually the news is bullish. Now, once again, these videos are for educational purposes only, and your results may differ from mine. But this is just something I have observed time and time again. Let's see. Let me go to, where's the chart? Okay, here we go. M1. Let's take that off. And properties. Let's freeze the chart so it doesn't auto scroll. So you can see exactly what I'm talking about here. So right here, we had a red candle 2 minutes before on the last minute before the news, it went down and it also turned indicator 2 to magenta, meaning it was prices below the EMA 5. And so I took my chances and I went long and I nailed it for something like 29 pips. I think I got on that trade. But then I went short and I was starting to take like 2 and 3 pip wins, and then it was getting choppy, and sometimes I even took like 0.3 pip win. Now, why would I take a 0.3 pip win? It's like that's nothing, right? But the thing is, if price isn't doing what you expected, or if price goes and stalls, or in my case, anybody who's let's see, where do I have it on here somewhere? I might not even have it on here. You guys all know I like the 3-level ZZ indicator. So let's just put it on. And if I'm trading and I see a one ball in front of me, if I'm long or short, I see that one ball, I am out. And it's just because more often than not, it'll turn around. Now sometimes it'll keep going and a one ball will become a two ball. So I'll stay in a trade on a two ball. But what would have to happen is price would have to shoot up so fast for that two ball to appear and for me to stay in the trade. So if I get in a trade and the one ball appears, but it keeps going up, I'll stick. But I'm ready to get out. Unless it turns to a two ball, then I'm ready to stick in maybe a little longer. But on some of these trades, um, taking a 0.2 pip win is much better than a loss. I mean, small wins, I'd rather be angry with a small win and price continue in the direction than a small loss. Because actually, right here, right before I made the video, I had gone long. I can't remember where. I think I went long here. And um, I wasn't, I was looking at a different chart. I was looking at a chart more like this, and it didn't have the three ball. And I saw something, I saw the signal and I took it and it went against me. And I just basically waited and I took another signal, I believe, and that one went against me. And I waited. Then I think I jumped in like 3 or maybe 4 times on signals on the lower side. And I finally punched out right around 40. Now, the thing is, it was a very small win. I think total on the 6 trades, I may have picked up 2 or 3 pips. But the thing is, on some of those trades, when you look at the actual trade, it was like a 0.3, and a couple were actually losses. But the thing is, overall was a net win, and I was out. So, for example, right here, you see we got some squigglies. Walmart and I have been playing with indicator 2, and so we've got indicator 2 here on the EMA um, on M1, that we also are plotting it from the M5. And the thing is, what we're looking at isn't that we're really trading with the squiggly. We're not really looking for anything from the squiggly, but what we're noticing is a bias. And so, like if you see the when price crossed over here, it's like, hey, you know what? Usually when it does that cross, it's good for about 4 or 5 pips. Walmart's been noticing, and that's just something to be aware of. So it's like, oh, we got the crossover. So if we're in a trade, that means to stick it. If we're not in a trade, then it means we might want to wait for, if we're looking for longs, we might want to wait for that to come back. And the other thing that I've noticed is you'll see price will just sometimes it just always returns to these squigglies. But what the thing is, what you can say is, if I were to go long and price were to hit this line and I've got a profit, I might just exit, because I've noticed many times it'll come up and then go back down, come up, go back down. And this is the indicator that I'm using. I've modified the mid dots indicator, and because you can see here how these lines are it's just pretty much straight. But then when I load it up and I start letting it plot live, you see how that one, because see each plot is the EMA 5 at the time right here for each one of these minutes. But back here, when the indicator goes back, it doesn't know what the M1 was, so it's just using the M5 for those 5 minutes, and that's why you get um, this pattern here, this straight line. Whereas here you see it's more squiggly. So yeah, like I said, I really don't like squiggly line indicators per se, but indicator 2's always been in my toolbox. And once again, it's not what you trade, it's how you trade it. So I'm not trading it the way most people, or the let's call it traditional trading teachings, would tell you how to do it. So you see right here, we got a gap up. What's that tell me? Price has got to come back down and fill that gap. I don't know when that's going to happen, but I might look for a nice short, and then when the price comes back down, I'd want to get out right there, because a lot of times it'll fill it and then reverse. So, for example, right here we had a close above, and so if you jumped in and, oh shoot, look what happened, it went down, right? You were under the M5 indicator 2, under the M1 indicator 2, but now look what happened. You get this another signal here, but then you get a close above the indicator 2, and so it's like, okay, maybe we can take that trade long. And so even though this was a flip-flop box, you saw this, it's like maybe not. And so if you get in, maybe you take the small win. So for example, when this blue stripe appears, if you could get in as close to that time, you might have been able to get out with half a pip or a pip before it pulled back. So when you're below both these lines, you're taking a chance. You get in here, I kind of like to call that no man's land. Anything can happen. You get above it, especially if you get above the M5 indicator too, then you can continue. You might want to ride it. And then again, just as I say that, you can see here it took it back. So what right here you would have had, you might have been in, let's say at 32. You had a high of 33. There was a pip to be had. And if you didn't take it, look what happened. So that's why sometimes small wins, you have to be able to take small wins. And the thing about it is, if you master taking small wins, every now and then you get lucky, real lucky, and price will run in your direction. So for, let's see, where would be a good, actually, I don't see one on this chart, but what I do see is I see a gap that happened here that got filled, but I also see a gap here that hasn't been filled. And then there's a gap here. So price is gapping. So I'm curious because I'm wondering how many traders out there watch these videos. Are you actually taking 1 and 2 pip wins sometimes versus sitting around looking for 5 or 10 pips? Because if you look at the chart here, here's an M1 smart range indicator. You can see here, you're going to have to sit in a trade for more than a minute to make pips. And look at some of these, there's just not much range. You shift over to M5, once again, I don't see anything over 6 pips in range here. So then you look at M15, and even most of these are under 10. So it just goes to show sometimes you're just going to have to take those small wins before they reverse on you. And so here, let's see. I guess that's on the end of the week where I have the higher low, lowest high. And I think right there was a lowest high break to the north side. You can use, once again, you can use almost any entry method, but what you want to realize is that sometimes it's going to work and you'll be able to make a profit, whether big or small, and sometimes it just doesn't, and you just might have to take the loss. And that's just trading. You just have to make sure it's a small L, not the big L, not the big loss that we discussed yesterday. So you don't go in over leveraged. You don't sit there and let it run, 20, 30, 40 pips against you, hoping it turns around. You might not even let it run 10 pips against you. And the other thing is, if you're struggling and say you normally trade a mini lot, go down to a micro lot and then get your entry, time your entries. And if you see it's working, you can always add to the trade, or cut your lot size in half, trade half a mini and then you still have another mini left. That way, on the chart, you actually have twice the distance before you hit your stop if you go in with half a position as opposed to a whole position. And that just goes to show you, traders, it's not what you trade, it's how you trade it. So go out there and drain the banks. And this is the Rumpled One, over and out.